What's happening, everybody? It's your boys. I'm Sean McLaughlin. That's Steve Strazza. This is the Flow Show. How's it going, everybody? How are you doing, Strazza? Did you recover from your trip to New York?
No. I told you I slept till 11 o'clock today. I'm still catching up.
If
Uh,
uh, if,
yeah,
if anybody was on our Twitter Spaces this morning, you heard me say that nobody at the CMT conference in New York City last week had more fun than Patrick and our boy Steve Strazza right here.
I mean, of course not. To be expected. I got a lot of friends in New York. I have a good time when I go back. There's a lot to do. But
I
no,
think the exact quote was on Friday, the last day of the conference. I got a text from Strazza. He's like, "I had to Irish goodbye the conference. New York kicked my ass."
yes, it did. We had a little too much fun, but that's okay. We only get together a couple times a year, even if that. So we all get together, and that tends to happen. I think we were
By the way,
doing,
shout out CMT. See, look at that. Look what I'm wearing.
yeah, doing some late night karaoke with a bunch of CMTs. I mean, you got to do it. That's what the CMT symposium is all about. Uh,
That's right. All right. So we were off last week because of said conference. So I know there's a lot of people out there who are pining for the Flow Show. They can't get enough Steve Strazza. That's really what it comes down to. So let's give the people what they want, Strazza. Let's talk about the latest Follow the Flow report. What's showing up on the option screens? Anything that has caught your attention that we should dig into?
Yeah, so just taking it from the top, making observations as I do when I look at this list. Right up top here, we got energy, right? Two really big ones. ExxonMobil, which really looks different than a lot of other energy stocks up until today. Exxon down 3.75% right
Ooh, I
now.
just put up the chart there. Yeah, it looks pretty ugly.
And that one was like holding up. Like if you look at Chevron, right, nowhere's near those pivot highs. So Exxon was really like the leader in the space. So seeing it get hit and follow to the downside today, no bueno. The price action from energy in general today, very bearish. Halliburton also on this list. That's one of the bigger names along with Schlumberger in the oil services space.
Lumberger.
Yeah, the Schlumberger. So oil services down 5.5% today. Space is under tremendous pressure. We're watching the 2018 highs, whether that's in crude oil, gasoline, XLE, or even the individual stocks themselves. 2018 highs is really our line in the sand for energy. Moving on down the list, you're going to find this one interesting. Only two bearish plays on last week's list, but KB Homes, we've been loving the home builders. And they look great. Even today's candle. Look at this hammer shaping up in KB.
Yeah, I'm surprised to see bearish activity in KB Homes. Does somebody know something? I mean, earnings is already out of the way, so we don't have to worry about that.
I don't like this one either. Look how far out they went, Sean.
They went where do they go? July or January? Yeah, next they went to January puts. What they buy? The 25 strike?
Yeah, they're betting on basically what you're reading about in the news when I look at this.
So they're betting on. I got a 1 year chart up here on my screen. They're betting on this thing breaking yearly lows.
They're betting on this thing falling apart. So all those headlines in the news that we're reading each and every day about how there's a problem in real estate, then we come and we look at the home builders charts. These guys are betting on the headlines.
That feels like a fade to me. I like fading people who are betting on headlines.
This is the first piece of evidence that I've kind of seen show up, suggesting that people are worried about real estate. Right? You can read about it in the news. That's one thing, but we haven't seen it. What we're looking at, market data terms, haven't seen anything. This would be the first.
Well, hey, that sets up an interesting trade idea here, Strazza, because we got two different stories unfolding here. We got whoever is making this bearish bet. They're saying that this thing is due for a crash, basically. That's one narrative.
Yep.
Price action is telling a different story, right? I mean, we're basically at all-time highs. Those are all-time highs, right?
Absolutely.
Okay, so we got two competing narratives. One of them is going to win. But then if you notice on my chart, look at the implied volatility. Cheapest has been all year. This could be like a Schlumberger trade there, Strazza. Maybe we put a long straddle on this thing, and let's see who's right.
I like that. I think that makes a lot of sense. You know what this makes me think of too? Like when you talk about, wow, okay, so they're betting in one direction, price is saying something completely different. it's that divergence right now between banks, which are moving, straight lower, and home builders, which are moving straight higher. We always overlay those two charts because they have such a strong positive correlation, the home builders and the banks. And right now they're moving in two opposite directions. That's not going to last forever. One of the groups will end up being right and the other one will be wrong. And you're going to see somebody play catch up or catch down. So
yeah. So let's check this out. That big put purchase was in January options. So let's look at the January options thread right now. An at the money straddle. So that let's call it the 44 strike. Yeah. If we were to buy an at the money straddle right now, it would cost us a little under $11. So that means we'd be betting on at least an $11 move in either direction. So if that guy who bought all those puts is right, then this straddle will definitely work. It'll also get juiced up because of implied volatility will rise, and that'll help the position. If he's wrong and price action is right, another $10 from here doesn't seem like that far out of the question from now until January.
I like that a lot, right? Because we're seeing the list of home builders that are breaking out to new all-time highs start to grow, right? We were talking about like DR Horton yesterday. The indexes are getting close themselves. If these stocks are right, KB Homes probably follows and makes new all-time highs. You get that 10 point, 11 point.
And if the economy itself just kind of breaks out, if we get that all clear signal, I mean, of course, home builders are going to go with it. And you said something very profound. I hate bringing up the Twitter spaces we did this morning, but you said something and I tweeted it. You said, you asked a question. What does the stock market look like if all these regional banks stop going down? Right. And I think the answer is the market goes way higher. That's my thought.
Because it seems like people are always talking about this in a certain light, which is that, oh my goodness, how is the market going higher with these regional banks, blowing up and going to zero left and right? Well, how impressive is it that the market's going higher, home builders are making new highs, semis are making new highs in an environment where banks are literally blowing up and going into FDIC receivership every other week? Yeah. So if and when that stops, that is pausing, right? Very soon, maybe these banks stop blowing up. Home builders are making new highs now. What do they look like when the banks finally get it together, right? And that's what I'm talking about, that divergence clearing up. If it clears up in a way where banks start playing catch up, the homies are going to be rocking. They're already telling us that's where they want to go.
We are talking Shawnee into this trade. I like this trade a lot the more I think about it. So a long strangle at the 44 strike in January options, paying a little under $11. Okay. Feels like a good trade. Now, we don't have to hold it all the way to January, and we could take profits along the way if we need to. But I think the odds favor that we'll be set up for anything, and whatever that anything ends up being could be something pretty big.
I like going out to January, right? Let's give ourselves the entire back half of the year. People are saying this recession is coming. It's supposed to happen in the back half of this year. Like, let's see it, right? And if it doesn't come, market's got to then, price that in. And I think we get that ripper. KB Homes.
Let's show people what this looks like. Let's get real option nerdy here for a second. On my screen here, I just put together a P&L profile graph of this trade. So what you're looking at here is this bright blue line. This is what our P&L would be on expiration day across a range of prices. These are on the x-axis here. These are the range of prices. So if we bought this straddle and KB Homes is trading at say $25 a share on expiration day, if I bought a 10 lot, I'd be sitting on about $8,100 of profit. $8,100 profit. Nice. If it went the other way, if it went up to $60 a share, we'd be also sitting on about we'll call it $8,300 in open profit. Very nice. Now, this purple line here, for those of you who don't know what this is, the purple line shows you, and this is kind of a best estimate. It's not, this is not gospel, but this is a best estimate of what the P&L of the position would be today. So if all of a sudden we put this trade on and KBH ripped up to $90 a share, I'm sorry, $50 a share, so that's $6 from here, we'd be sitting on about $2,000 of profits. Not likely to happen, but this just shows you today. And this number, and this line will morph as you go further. As we get closer to expiration, this line will kind of come down and meet this blue line, which is static. This never changes. But as you can see, where we go big down or big up, we can make money. Obviously, the worst case scenario is that it just sits here and just slowly decays away and we lose money. But we could set up a stop loss for that, right? Like if we pay $11 for the spread, we could say, okay, our line in the sand is 7. If the spread trades down to a value of $7, all right, we pull the plug. It's not working. Things just sitting there. We're out. So lots of ways to manage risk here.
At what price are we breaking even at expiration? Is that like 55?
It'd be 55 on the upside and 33 on the downside because it's about $11 we're paying for the spread. So you add $11. You add and subtract $11 from the current price, or from the strike price, excuse me, which is 44.
I mean, I just zoomed out on this chart, Sean, and if we take out those highs around 50, right, and scenario A, no recession, no bear market plays out, banks play catch up, we get that breakout. All-time highs in this name are above 80. There's your price target if we get that move.
I'm looking at weekly candles right here. We got 3 years of weekly candles on my chart.
Yeah, I was looking back to the pre-financial crisis highs.
Okay. Yeah, man. You've talked me into it. I'm doing this trade.
All right.
I like this.
Let's move on. We got more to talk about.
Okay. What else you got?
So banks. We got to talk about banks. I want to know, I wasn't paying attention last week. We were, traveling for the CMT. We had this bearish flow in First Republic Bank. Shouldn't the premiums be so juiced in these things by now? Like, is anybody making money buying, going long puts in these names right now? Like,
premiums are juiced. Look at that implied volatility chart down here. Look at that.
So pull up. I wish I could go back and see what it was last week. Pull up Pacific West, because Pacific West today is like what First Republic was when we were going for a walk in Central Park and laughing about it on Wednesday. They're the next one to go. Yeah. So, okay. That's, you could have bought puts on this thing when it was coiling in this bearish continuation pattern. Do you see where that implied vol was just a few weeks ago? That was the time. That was the moment. You bet on these bearish continuation patterns to resolve lower. Let's look at some of them here. Sorry. So showing them on my screen now, like, look at this thing in First Republic. The writing was already on the wall. It's in the 90% drawdown before it broke down and everybody realized it was going to zero. I'm talking about back here in this coil. You could have bought the puts there. I don't think you want to go buying them in these banks now.
No. By the way, sidebar, you hit on something that reminded me of something. Is that, go back to that First Republic chart for a second.
What is disaster?
When we were coiling there, the stock had already just lost 90% of its value.
Right.
And when people hear that, they're like, oh, it's down 90%. Well, how much further can it go? Well, guys, it's just math. If you got short at $12, it could go down another 90% from there. It's still 90% on your money. Like, people forget that.
Some people entered some great trades here and got paid in a week or two's time. Right.
And a lot of people on that little green candle right before the last sell-off, a lot of people thought they were buying the dip and they got railroaded.
That's how it works, dude. That's how it works. They get you out and then flush. Like, with something like this is why we're trend followers, right? We always follow and we assume that patterns will resolve in the direction of the underlying trend. In this case, the underlying trend was, just strikingly lower, clearly lower to the downside here when this was coiling. And I think we're going to see in more banks. Like, here's Pacific West, right? So what does this chart look like next week? Might look a lot more like this one. Regional banks in general, man, the writing was really on the wall for these things. This was the index, right? After the March blow up, you have this beautiful head and shoulders top, oiling in this bearish continuation pattern after a massive distribution pattern just resolved lower. Of course, these things were going to break to the downside. I'm glad you brought this KRE chart up here. I want to do a little sidebar on this one real quick. So some of you guys know I run a portfolio for JC. We do a short strangle, option strangle portfolio. We call it paid to play. And what I like to do is when I put new trades on, I like to sell strangles in the ETFs that I track that have the highest implied volatility. Well, this morning, KRE was at the top of the list. And I was about to put the trade on, and I looked at that chart, and I'm like, no, this looks like bad news all over again. I'm not touching that one. So we skipped that trade. See, if you were like an algo doing your job every morning, you would have put the trade on. So that's.
Yeah, well, we got hurt pretty bad on that last leg down. So I'm not doing. I made my mistake. I'm not doing that again.
Do you think they're going to teach AIs to read chart patterns and put me out of work?
Of course, they're going to try, but they'll always be alpha for you guys like you, Straza.
So, do you want to like end this on a positive note? I got one good looking chart. Maybe we could talk.
Yeah, give me some good news. Let's let people leave here smiling.
You're a music guy. You got a Sonos in your house? I used to have a Sonos.
I'm an Apple TV. I'm an Apple speaker guy. I got Apple. What do you call them? Google. What do you call them?
Products, man.
My house is all Apple.
Big Apple guy, huh? All right.
Yeah, I got Apple speakers all over the place.
So anyway, some people have Sonos speakers. They work well too, and I like this bass. I think this bass works, right? It's just classic. This is what we're looking for in growth stocks right now. Call it 2150. Those pivot highs. I like the relative trend kind of turning the corner here.
Well, I'm sorry to burst your bubble on it, but it looks like it's got earnings coming up very soon, May 10th. So next week. So I like the base, but I'm going to hold on. I mean, I think the implied volatility, if you see it on my chart, they're pricing in. I mean, this is what happens when you got earnings coming up. It starts to ramp up. Yep. So I would wait on that one. I like it, but I would wait.
Yeah, so what you do in these situations, let's get the earnings reaction, right? Because the pattern isn't completed yet. Something like this running into like a key level of interest right ahead of a big event that's going to cause volatility, it can go either way, right? Because this is still a sideways trend right now. We always say that for earnings reactions tend to occur in the direction of the tactical trend. Tactical trend here, still kind of sideways, maybe higher. What you'll typically see here, you get a nice gap above this breakout level, and then you get a retest, and that's where you want to buy something like this.
I'm glad you brought that up, Straza, because we have a little chat room for All-Star Options subscribers on Telegram, and there's been some chatter about our monster position. So look at this chart of Monster. I mean, finally, this thing's just kicking ass. This is finally great. However, Monster has earnings coming up, I think, in 2 days.
Oh, that money. Take that money.
Well, I'm just going to say, Straza, we have a price target on this thing. And my plan from day one, when we put this trade on, 4 months ago, if this gets to 58, which as you can see, it's very close. If it gets to 58, I'm taking the trade off. I'm booking the profit. And I mean, this thing obviously hasn't ripped a lot more since we were talking this morning. But one of the questions that I had was, we got earnings coming up in 2 days. Should we take the trade off then? And my answer was, no, I'm not, because earnings is probably going to be the catalyst that gets us to our price target. But it looks like we might get there even faster.
And for me, I would probably take something like this off, right? Because what I was talking to Brian Shannon about this at dinner last week, right? He's the one who taught me that earnings reactions tend to occur in the direction of the tactical trend. He was also making the point at dinner that oftentimes you'll see earnings reports or results priced in before the release, right? So investors are looking at something like Monster saying they're about to release bomb earnings, right? And guide just fine. These companies do great in inflationary environments. They just make the consumers eat it like nobody else can. So I think that's what's going on here. Maybe, like you said, you get a gap up on that earnings report, but it's likely exhaustive, right? Like, look at this move into earnings. They're going to have to report some amazing news for this thing to keep running after, I would think.
Well, let me just confirm that earnings date. I think it's the 4th.
I got it. These staple stocks all look so good, man.
It is May 4th. So we got 2 days until earnings. My guess is we're going to see follow through in this thing tomorrow, and we're going to be out tomorrow. And we're not getting out because of the earnings. We're just getting out because it hit our price target. It's right there.
These stocks all look so good. It's the whole bunch. Like, I know you know about Hershey's, but Pepsi too, making new highs, like Mondelez. Anybody who sells sugar or is in the grocery store, these stocks are really working. Keurig Dr. Pepper looks like crap. I don't know what they're doing wrong because they're in the same exact business.
What's that ticker?
ADP.
ADP.
Yeah, it's like one of those things when you're flipping through holdings, like they all tend to look the same, right? Like right now, if I'm looking through banks, I see a lot of ugly patterns. A good one would really stand out. I was flipping through the staples names, and all of them look really good or making new highs. And then there's Keurig. I don't know what the hell they're doing. People,
you get the wrong ticket there. Did you say Dr. Pepper? Is that what you said?
It's Keurig Dr. Pepper, KDP.
KDP. Sorry. Okay, there's the ticker. Oh yeah.
Look at that. Ugh, gross.
All right. Well, look, we've gone a little bit longer than we usually do, so let's sum it up here. We like a long strangle in KB Homes. Mm-hmm. In fact, I may put this trade on tomorrow. I mean, market's about to close here in 5 minutes. I like this trade, and if you're bullish on anything sugar, I mean, it seems like you can't go wrong on anything that is bad for you health wise.
Sugar futures above 24 all day. I mean, it's all working in that space. Don't tell Perlman it's so not keto.
It's so not keto. All right, ladies and gentlemen, Straz and I, we are definitely not keto, but this has been the Flow Show. Thanks for tuning in. We'll be back next week. Take care, everybody. We'll catch you next time.
Peace.